Welcome back, Social 30. This is the last unit, or sorry, the last lesson on the unit on economic liberalism. So within this unit, we began the unit by looking at, what is an ideology, what is individualism, what is collectivism. Then we looked at the key philosophers and their ideologies. Within those key philosophers, we looked at Adam Smith and his philosophy that inspires laissez-faire capitalism, that unleashes the potential of the Industrial Revolution. Then we saw in chapters 3 and 4 some flaws within the classic economic liberal Industrial Revolution era that will ultimately lead to some responses by people like Luddites and Chartists and socialists and communists. We looked at the progressive era, we looked at the evolution of classic to modern economic liberalism. We saw the successes of modern economic liberalism and the challenges with it in FDR's America and Bennett and ultimately Mackenzie King's Canada. Then we saw the growth of modern economic liberal state by looking at the role of the Canadian government in our economy, creating a welfare state in Canada. And then we looked at neoliberalism, neoconservatism, and its response to Keynesian economics and its cry for a return back to the economic right. So to finish this case study, we're going to look at the 2008 financial meltdown. Then what comes next? After this case study, we have a test tomorrow, but after that, our next topic is really going to be chapter 5 of the textbook, and we're going to be looking at collectivism economically. We're going to be studying communism in the Soviet Union and fascism in Germany. We're going to study it economically and then transition into politics. So when we do that, we'll talk about dictatorships and authoritarianism and the techniques of dictatorship. And then once we get done that, we jump into chapter 10 of the textbook in democracy, and we jump to 11, and then 13 and 14 in citizenship. And then we do the Cold War, chapter 7, and we're done. So we are on track. We are on track. So, lesson number 10, case study, 2008 financial meltdown. To create, or to make this long story kind of short, what we see here is that when the government stops watching the people, when they deregulate, then what happens? The irrational, greedy nature of mankind creates a new crisis. So the 2008 financial meltdown is often used in essays in conjunction with the 1929 stock market crash, in conjunction with the 1638, I want to say, tulip mania. This is just a recurring theme that when mankind is free to act as independent economic calculators, as Adam Smith would say, that we should have the ability to calculate for ourselves our own self-interest. Through greed, we end up creating some irrational, irresponsible decisions. So that's what this case study is meant to show us. It is a case study that should be in economic essays. Definitely fits with the essay that we have coming up. And it is also a case study that should be seen in some multiple choice questions. So just looking at that essay that's coming up one time together here, if we go to Google Classroom, go to classwork, we have this assignment. It's the only assignment looming right now. And it says individualism creates the vision that destroys society. The path to a nation's full potential is best achieved through collectivism. So next week we'll study the collectivism part, but after today you should be able to dissect and respond to the individualism part. And there we're seeing, does individualism create destruction of society? Let's take a look at the 2008 financial meltdown. So we have something called the Crisis of Credit video that you can certainly watch at home. It's 12 minutes long. You're going to get lost. You're going to get lost in it. You're going to get lost in some of the language, some of the industrial jargon. But again, to make a long story short, let me take you through how the financial crisis began. At the end of the Cold War, some mathematicians found themselves without jobs. These are literally rocket scientists. And now NASA and the US military machine, they're like, well, we don't need as many rocket scientists anymore. We are going to defund the military a little bit. So you have a lot of bright people, men and women, looking for jobs. And many of these mathematicians, they get involved in finance. Also in the 1980s and the 1990s, the financial sector becomes less regulated, as we talked about with the story behind Wolf of Wall Street. So there's a lot of opportunity to try things that maybe the government should have been monitoring, but the government isn't really watching because they haven't funded enough people to watch. So some of these mathematicians come up with algorithms. How do we make more money? Mathematically, how can we make more money? And they come up with the idea of subprime real estate. Subprime. It's hyphenated, subprime. So subprime real estate's this idea that we've already lent out money to all the prime candidates. Everybody who's a prime candidate for a mortgage, they already have a mortgage. So how do we reach new customers? Where's our growth industry? Well, we need to sell to subprime candidates. So the subprime mortgage idea is to extend mortgages to people that can't quite afford them. So banks become quite aggressive at finding subprime candidates for mortgages. And they typically offer them some rates that float. So it appears to be, for the consumer, a relationship that they can afford. So they might come to you and offer you a lower interest rate, but the lower interest rate is going to expire within 6 months or 12 months. It's going to bubble up. And when it bubbles up, the cost of that loan is going to bubble up a lot. To the point that some people can no longer afford their monthly mortgage payment. And the bank is saying that, if that happens, then the people declare bankruptcy and we get the house. And to the bank, they think that that's a good idea because housing costs, housing value keeps going up in America. So as long as housing value keeps going up, if the bank inherits all of these bankrupt, foreclosed houses, then the bank doesn't need to worry about losing money. But the problem is the subprime field of customers was so big, talking about millions across the United States. The bank didn't foreclose on 1 or even 100 or even 1,000 houses. Banks were foreclosing on millions of homes across the US. So when millions of homes go into foreclosure, now the bank owns millions of houses and they try to sell them. Now the price of houses starts dropping because there's too many houses for sale. And the banks get desperate and they start selling them at a loss. So the strength of the argument from the banking perspective is, we'll lend money out to subprime people, and if they go bankrupt and we take the house, that's okay, because the house will be worth more, because house values keep going up. But that didn't actually happen because they end up taking on so many foreclosed houses that the value of the houses starts going down. So you might have a house that has a $400,000 mortgage, but because so many houses in that neighborhood have gone into foreclosure, now that house is worth $100,000. So the bank is about to lose $300,000 on that house. When the bank loses hundreds of thousands of dollars on enough houses, banks go bankrupt. So what was one of the problems of the Great Depression? Banks went bankrupt. Why did banks go bankrupt in the Great Depression? Because people were acting irresponsibly, irrationally, they were gambling on the stock market, and banks were lending money to people to gamble on the stock market. So in 2008, it wasn't the stock market, it was the housing market that people were gambling on. They basically had the same logic. Hey look, this house just keeps going up in value. I should jump in because it's only going to be worth more next year. Even if I jump in at a interest rate or a mortgage monthly that's fairly unaffordable to me, in the future if I have to sell the house, I'll make a profit. But as more and more houses began to go into foreclosure and stock market prices collapsed, then people found themselves owing more than they had equity in their house. And that's why they had to declare bankruptcy. And then the bank gets the house through foreclosure, and then they lose the money. When enough banks lose money, then the financial sector collapses. And And some of the biggest banks in America were facing bankruptcy. So banks like Freddie Mac and Fannie Mae, these titans of Wall Street, these billion-dollar corporations, multi-billion-dollar corporations, had to go to the federal government and say, we might fail. There had always been this idea that they were too big to fail. That corporations that size could never go bankrupt. But now they needed a bailout from government to survive. And that bailout is going to be about $700 billion. And the controversy during this time is the US government under President George W. Bush, and then later under Barack Obama, they bail out Wall Street, but they don't bail out Main Street. What does that mean? Well, they come to the aid of these big corporations like Fannie Mae and Freddie Mac, but they don't come to the aid of the individual families that are losing their houses. So they let the individual families that are losing their houses lose their house, but they don't let Fannie Mae and Freddie Mac go bankrupt. So it seemed to expose a question of loyalty to American people. You know, whose interests is the government serving? Doesn't seem to be serving the people, because they let the people lose their house. Seems to be serving the corporations. So this is where we begin to toy with the word corptocracy instead of democracy, right? Corptocracy is ruled by corporations. Or it might be a plutocracy, ruled by the rich. But it didn't feel like a democracy, ruled by the people. Because the people were allowed to lose their homes at the same time that the banks were saved. Now, a problem in one sector can snowball into other sectors. So the problems in the financial sector begin to contaminate the auto industry. And companies like Chrysler and GM, they needed bailouts too. I believe Ford said no. Ford said, we got this. But Chrysler and GM, they needed money to stay competitive in the global village, and they needed money because of the economic shock that was caused by the crisis of credit, and the government had to bail them out as well. So you had to transfer money. What this is a transfer of money from Main Street to Wall Street, from the 99% to the 1%, whose interest is government serving. It's the oligarchs, it's the plutarchs, it's the corporations, it's the rich. And many would argue we're seeing a similar transfer of money here in 2020. So some background information about the actual crisis of credit can be found here. It's going to talk about like credit default swaps and derivatives. It's going to get into the mathematic algorithm, and it's too much for what you need to know. You need to know what's happening generally, but one strong message from that video is banks were purposely fraudulent. They were purposely hiding bad investments. So they would take these subprime mortgages and they would stack it with a whole bunch of prime mortgages, and then they would sell it off like it's all prime mortgages. So let me use meat as an example. Subprime mortgage is like bologna, and a prime mortgage is like AAA beef. So you put AAA steak at the top of this box, this case of meat. So the first layer, very thin layer, is steak. Somebody looks in and they think it's all steak, but underneath that it's rotten bologna. So somebody thinks they're investing because the bank lends out these mortgages, but then they take the mortgages they lend out and then they package them as credit or little packages that investors can buy into. And when the investors are looking in, all they see is like AAA investment, steak. They don't understand that it's rotten bologna underneath, and that's how the problem created by the banks ends up poisoning people that have invested. So people might have their 401k in the United States, which is like an RRSP. Their retirement savings might be invested in these bank, basically funds, and America lost millions. Well, collectively they lost trillions, but people lost millions because the bank was being fraudulent. They were misrepresenting what it was that people were investing in because of the way they packaged it up. They would give you a little slice of stuff. So they'd slice things up into so many little shares that it became confusing as to what you're investing in. Confusion in the market led to the 29 crash. Confusion in the market leads to the 08 crash. So let's talk about the 08 crash. $6.9 trillion of value was wiped off the global stock market in 08, the largest fall in history. For perspective's sake, in 1989, there was a Black Monday where $500 billion of value was lost. So 6.9 trillion. Value lost in 08 was the worst year in the stock market up till this year. But we know that this year, we've already recovered from March. That the Dow Jones has already recovered. We passed 30,000, we're below 30,000 again, but we're certainly not down to the 16, 17,000 that we were at in March when people panicked. But in 08, we saw $6.9 trillion of value lost as there was a correction in the stock market. A correction in the stock market because prices in stocks, prices in real estate have been artificially bubbling up in a non-sustainable way because they allowed this bubble to be fueled by speculation and not by reality. Speculation causes problems. So, I'm kind of a numbers guy. So here's the Great Recession by numbers. Housing prices fell by 31.8%. 31%. So if you had a house worth $100,000, you just lost $31,000. So the problem is, not only are some people losing their houses, but you might live on a block and you're like, well, the people next to me on both sides, they lost their homes and they foreclosed. I can pay my mortgage, but why would I? I still owe $250,000 on my house, but now it's worth $175,000. I owe more than it's worth. It makes better sense to walk away. So it wasn't just people that couldn't afford their mortgage that walked away from their houses. Some people walked away from their houses because other people around them walked away, and now their value was so low, they were upside down on their mortgage. They owed more than the house was worth. You saw entire cities like Detroit that basically seemed like they imploded as neighborhoods were abandoned. It was kind of neat seeing deer walking through the neighborhoods and stuff like that, but you have thousands of homes in Detroit that became abandoned and it became dangerous. Things like gas lines and stuff started exploding. Unemployment was still above 9% in 2010. We had $144.5 billion moved from money markets to treasury bonds. Some of these things probably don't mean a whole lot to you, but Fannie Mae and Freddie Mac guaranteed 90% of all mortgages. And the federal bailout of AIG, another group of American financial companies, was $182 billion. So what the US government is doing is they're taking money from taxpayers, both present and future, and giving it to corporations to survive. The problem is that when they give these billion-dollar bailouts to corporations, what happens with the money in the corporations? Sometimes the CEO, the CFO, the COO, what do? They give themselves bonuses. It's like, whoo, we just got a bailout from the government. I'm going to give myself a $50 million bonus this year. What? Really? These people are losing their homes? Government has to come and bail you out, and at the same time, you're giving yourself a multi-million-dollar bonus. That seems corrupt. So there's lots of little things going on here like that. It is a global recession. The countries in red were affected as it spread through the Western first world, like dominoes. And you can see lots of perspectives here. Here you have the pundits blaming the poor. It's your fault because you bought a house that you couldn't afford, right? It's your fault, subprime consumer. But in reality, it was Merrill Lynch. It was Wall Street. It was the Washington Mutual Fund. It was Countrywide. It was Bear Stearns. It was GM and Lehman Brothers and AIG. These are the corporations that created the scheme that that caused the collapse. So the ideological perspective of this guy is let's blame the poor. The poor guy's being humbled by it, but the perspective of the cartoonist, no, it's corporations that caused this. And why did corporations cause it? Because the government deregulated, because they're practicing neoliberalism, what they call neoconservatism in Canada. So what caused this? Hayek caused it, Friedman caused it, Reagan caused it, deregulation caused it, because he allowed the financial sector to act too independently. The SEC wasn't watching. So we got lots of little, what I would call rabbit holes that you can go down to have some more quotes and stuff like that. But again, you've got this cartoon being critical, and the thing is, capitalists usually want freedom from government, right? Capitalists are like, hey, government, just get out of my way. Until capitalists need help, and then they're the biggest people in favor of government bailouts. So Fannie Mae, Freddie Mac, these corporations, AIG, the banks, the big auto companies, they're all taking bailouts, but it's hypocritical because these are capitalist corporations that typically want freedom from government. They want low taxes, they want very little regulations to get in their way until they need government. And then they're like, oh yeah, I'll take some of that bailout money so that I can go off and have a great holiday. Now, we can look at who received the money. Now, I have to be honest here. Some of the companies that received the money, the federal government of the United States actually made the money back. So, for example, in Fannie Mae and Freddie Mac, they became government-sponsored enterprises. So the government didn't just say, here's some free money. They said, you know what, we're going to buy some share in your company. So in Fannie Mae, the government actually ends up making $68 billion out of a $119 billion investment. So they buy in when the share value of Fannie Mae is low. Fannie Mae is facing potential bankruptcy because the value has plummeted so low. The government says, you know what, we're going to give you money, but we're going to want some shares in return. They made money. They made money on Freddie Mac. They made money on EIG. They lost money on GM because GM cars are brutal, right? If you own a GM, you're basically the worst kind of person. I had no idea. I had a Cavalier once. Of course I hate GMs. That's like the cheapest car, right? That giant sucking sound. $700 billion being sucked from taxpayers, right? Bought to you by the party of smaller government. So that's, again, the hypocrisy, is that the Republicans are trying to say we're practicing a revolution away from Keynes. We want small government. But it was George W. Bush, a Republican. His dad was Reagan's vice president. He's a disciple of Reaganomics. He's spending $700 billion to save the economy, but who's getting the money? It's not the taxpayers. In Canada, at the end of the day, we need to be asking, who did Trudeau spend the money on? Where's the money going? Because he's not showing us. You've spent, $500 billion fighting COVID, but where's the money gone? You talk about guaranteeing vaccines, this company, that company. How much money have you given to companies that aren't even Canadian? So we got some other cartoons that, from the perspective of a Marxist or Stalin, basically this was going to happen because liberalism is equated with recklessness. That liberal economics is recklessness. That people become blinded by greed and they become reckless. Here's that hypocrisy. Government, get off my back. That's the essence of Reaganomics. Let's deregulate. But because they deregulate, they create a crisis, and then they're like, I don't need government. Same thing's being shown here. Karl Marx wrote Das Kapital, and he's seeing that in America, banks are once again collapsing because we created a financial house of cards. Bubbles break. Now, when the bubbles broke, government said we have to practice austerity. We have to cut spending. Much like the Alberta government's already saying, we got to cut spending. So where are you going to cut? Well, the undertaxed, rich, and untaxed corporations, the military and the corporation media, They're not gonna get cut, they're the fat pigs. What are you gonna cut? You're gonna cut a little bit from schools and housing and Medicare and roads and libraries and social security and food stamps. This guy is the one that's gonna need to take some cuts. And, there's a lot going on here. The problem is, the wrong answering of the three basic economic questions. The problem is the corruption of government by the rich. The problem is sacrificing the middle and lower class to keep the elite class in a position of extreme wealth. The problem is disparity. And this kind of sums up a lot of what you could build into your essay. Because again, what's that essay? That essay said individualism creates division. What am I seeing here? Division in society. And what's going to happen? You're going to have to say either the nation's full potential is not going to be met, or you're going to see destruction. Eventually in 1789, these guys had an epiphany, and it was the French Revolution. In Karl Marx's doctrine, he believed that eventually we would have an epiphany and we would have a communist revolution. We haven't had that yet. But if we continue to have the 1% that feed off the 99%, and a government that instead of protecting us, protects them to remain bloated and inefficient, that revolution will have to happen. That's what this guy's saying. People over banks. So this was one of the photos in the January 2020 diploma exam. So if you had been in the course a year ago, you would have opened up your booklet, and this would have been one of your sources. And that's it. It's like, okay, what's the problem on the page? What's the solution that this guy wants? What's the assumptions he's making? What's the values his assumptions based upon? What's the context? What caused the problem? Who would agree with him? Is there any evidence that would further his perspective? Why is this an important thing? What's the significance? What's the division of society? Who would disagree? And what kind of bias would they point out? Those are the steps I hope you just did in your group, and you handed in on the other article, because those are the A1 steps. So, we talk about austerity in Canada, but I also wanted to include some stuff here about our former Prime Minister, Stephen Harper. And I'm not trying to sound like I'm a devout conservative, and Harper was the greatest Prime Minister ever. But when we look at the global recession, what was the one G8 country that was least affected? It was Canada. We were the first ones out of the recession. And yet here we are doing, next to Italy, the worst during COVID. So here's Harper's response to the financial meltdown. How did Canada fare? And what I've done is I've gone back to the actual debate in the House of Commons, and you can read through some of the language, some of the partisan debate that they engaged. It's quite interesting. Please keep in mind, we still have 4 minutes left. You have lots of time to pack up. The stimulus action plan, the Canada Action Plan, some people were critical of Harper and suggesting that maybe all they're doing is creating jobs to create a pit, but the pit has no purpose, right? So this is the type of cartoon you could see tomorrow on your test. There might be some multiple choice questions attached to that, and you have to figure out the ideological perspective. So we got some quotes here about what was done in Canada in response to the global recession. I would say it would be to your benefit to read over these things at home, and yeah, maybe we'll end it there then. Okay, so that's the financial meltdown. That's the end of economic liberalism. We have the multiple choice tomorrow, and then starting Monday we'll be on to chapter 5 and economic and political collectivism.